Hey, Steve and Andy, what's going on?
Hello. Hey, Scott. Thank you. Hello, Andy.
Hello, Steve and Scott and everybody out there.
Steven Scott. That's my brother's name. You sound like my dad.
It's true.
All right. Well, hello, everybody. Thanks for finding your way in here. Trade of the Week is our weekly Tuesday afternoon webinar. And like Scott said, I'm your host, Steve Gomez. I'm user number 3 of the Trade Ideas system back since 2003 when the basic platform was being built. And Andy as well is an also very early adopter. All right, so quick disclaimer, just a reminder, we're a software as a service subscription company, and anything you see here today is not to be construed as investment advice personal to you. If you need any investment advice for you or your family, you got to seek out the guys who are licensed to do so and collect a fee for doing so and playing golf on that fee. So moving forward, please don't construe anything you see or hear as financial advice tailored to you. The first slide is always a reminder that we have a very in-depth program here, a platform of software that it's not really easy to learn in just a couple of days. So we have a vibrant community of traders and a vibrant concierge onboarding service for you in different forms. First is the live trading room on the right there. That's a screenshot from Barry's room. Matter of fact, he's soon to be migrating to a new platform, which is going to be much more efficient and cool. I think all the users are really going to dig that. So keep that in mind. That's coming soon, if Barry hasn't already announced it. But he is sharing his desktop to about 500 people every day for free, which is a great price. That live trading room is certainly as valuable as any other room that people are paying $79 out there a month for, in our opinion. So it's a great place to learn from a few good traders in there, as well as learn our product. Barry is good at sharing his time and his desktop and giving people tips and answers to their questions. So if you haven't been there, you can get there at the top of our webpage under live free trading room. Also, the afternoon webinars, like we're experiencing right now, are a part of the Monday through Thursday cycle at 5 p.m. Eastern. And Jamie does yesterday. Today is always the trade of the week. Tomorrow is Dan and Brad. I believe tomorrow's canceled for some reason. They may have a very important meeting. But typically the new demo versions, kind of a sneak peek as to what the mad scientists are working on. Brad and Dan, that is, they kind of share a few things on the Wednesday webinars. And then Andy does same kind of format as today on the Trading Studios with Jamie on Thursday. And then if you're new and you haven't figured out that we have a 3-hour Friday support session every 11 to 2 every Friday Eastern, please find your way in there. It's part of our webinar series. You just signed up for the webinar. You just register for the Friday sessions. And what's great about that is we just open the room and say, hello, who wants to talk about what? And so that's a great opportunity for people to come in and get questions answered, get some demonstrations, maybe get some help with scans and configurations and whatnot. So that's every Friday. And then lastly, at the bottom, we mentioned the Trade Ideas University. I just completed the 201 class today. So again, Monday, Tuesday, Wednesday, and Thursday, starting off basic and getting into the more advanced stuff on Thursdays with Jamie and Sean, repeats every week. And maybe Andy might even drop in the chat window a link to our YouTube recording of that playlist. There's 4 videos, just like the 4 classes. We recorded those a few months back, and they're still very relevant until we update them. So if you want to get a head start or you missed one of the classes, I think Andy will drop a link in there that shows you how to get to that YouTube playlist into the chat window portion. All right, so a couple thoughts here on this one, and this slide's always intriguing to me because when we get to it, it just constantly reminds me of the future that lays ahead for us. So, kind of interested in that stuff and read a lot of blogs and have some opinions myself. And, you know, going forward, if you got a kid that's getting ready to go to college out there, do them a favor and don't send them to college with an accounting degree. I think in a few years, a lot of these types of services that require, you know, the corralling and data processing of data and numbers, it's going to be difficult for humans to get paid to do that. And that's the future we're moving into. Generation Z, I think, has kind of figured this out. The teenagers in high school and junior high now, they've watched the millennials generation ahead of them fall into the trap of getting into $100,000 in debt and falling into a workforce that's not quite ready for them or useful for them anymore, and especially going forward as we get into more AI, man and machine, it's going to be difficult. So Generation Z has kind of learned from that. It's not the millennials' mistake. They were kind of led into that by their family and school, and it's what everybody did. But now you got people tending 2 jobs at a bar just trying to pay their student loans. It's kind of sad. So Generation Z is learning how to weld and plumb and do some things that AI can't do. So the segue into that is that, going forward, we can't just rely on machines, because man and machine are going to work together. The machines are going to curate, and the AI is included in that machine. It's going to curate all the necessary data that we need, and then there'll be humans kind of managing that data. And that works perfectly with what we're doing here at Trade Ideas. Our platform is a curator of data, and especially the AI, which we'll talk about, is a curator of the most probabilistic data that we might see. But we work together with it. We don't rely on it. We don't plug it into what's called a black box and just turn our back on it. This is especially relevant as we get forward here in the Brokerage Plus, and people want to start using the Brokerage Plus auto trading tool, and instead of coming up with their own strategies, they just want to plug into the AI. That's coming, and so that's a great example of not just turning your back on it. Where I was going with that was, you can't just plug in and turn your back. You got to plug in and still manage and still curate. So we'll be talking a lot more about that in the future. So a little bit heavy on that slide, but that's okay. So the amens to that, says Waleed. Oh, and good to know, David. I didn't step on Barry's toes and spoil his thunder. He's been announcing his new room platform as well. Good to know. All right. Oh, that's right. And thank you, Robert. Tomorrow we're doing a options presentation with somebody who's very valuable outside of the Trade Ideas family. He's going to present to you guys tomorrow. So cool. Thank you, friend. Welcome back. Yes, I was in Colorado. Had a great time. I did not do the Trade of the Week. Andy came up with the Trade of the Week, so we'll both have something to talk about that, which is a good segue here. We'll do the market recap. We'll talk about Holly recap. I have a few thoughts as well. Trade of the Week we'll both weigh in on. I think the sector glance is a good exercise to go through to kind of see what we could expect through tomorrow. We set some price alerts, I think, last week before I left for Colorado, so we'll check on those and see how they did and set a few more going for next week. And then if we have time, we could do some open Q&A and charts, time permitting. So let's get into the details. I know a lot of people do attend last night's webinar with Jamie, so there will be some certain overlap on what's been happening in the bigger picture. So we'll start with the S&P, and I think, we talked about wanting to keep that 200-day moving average intact. So more importantly, before I do that, we need to look left a little bit, and we need to remind ourselves that this level right here was attempted 3 times. Let's mark that up and then move back forward in time. And what do you know? What do you know? I need to redraw that. There we go. That orange line comes into play yesterday. We tagged it perfectly in yesterday's highs right there. Look at that superimposed perfectly. I mean, as soon as that level was hit, probably algos and machines and bells and whistles were going off. That it took 3 times before we had to retreat last time here at these levels, but we tagged it yesterday. So that was kind of expected if we were to get through the 200-day, but more importantly on the 200-day for me, I want to see some sort of a pullback and maybe a rest on it. And maybe today's action was the beginning of another day of pullback or two, but if we can pull back and bounce off that 200-day moving average, just like I think the Dow did first, there it is, perfect. Look at how the Dow did this and kind of led the way, but we want to see the more multi-weighted S&P do this same thing. So where we are necessarily respectively is kind of maybe right here in terms of relevance to the 200-day when we go back to the S&P 500. This market is in kind of a funky place right now. It's blown through all the gates of resistance. Here's another great example back here of the move that got sideways when it hit that first level of support, which was prior resistance. So we fully expected it again to hit some resistance walls, and it did yesterday. But where to from now? I mean, the psychology of this market is interesting. FOMO, if you haven't heard that and don't know what it means fear of missing out. whether it's a party or a trip or whatever, fear of missing out also is relevant to fear of missing out in money in markets. And there's a lot of people, myself and Andy included, who wouldn't mind a nice little pullback to that level and maybe even deeper to create some more opportunities. We'll see, but what's happening is this price action just keeps leaning out and leaning out on a branch, and eventually, that branch could break. We just don't know how deep, but it would be nice to see some sort of a break to at least kind of, again, give a shower and clean up a lot of charts that are very much overbought. And so Andy will touch on this a little bit as well. It was kind of hard to find a trade of the week this week because everything was just kind of nestling up right underneath this major resistance level that's been ominously approaching as we've been doing this. So bulls are still intact here. I mean, technically, we're really only a few percentage points off of the all-time highs. Quite a different story than we were talking about down here at bear market territory, down 20%. So, here's our big range, these two middle orange lines, but ideally, just a soft little pullback, maybe a giant cup, and the handle is to come here over the next couple weeks or so. Then we might have the ability to have a nice assault back above this triple top back here, triple resistance level, that is. So that's for the most part. A little bit yesterday, I expanded on the intraday stuff, and I reminded people that we all look at daily charts, but it's the intraday stuff where the real artistic, different approaches, different methodologies, different time frames really start to distance yourself from other traders. There are 1 minute traders who like that 1 minute chart, and I always say more power to you if you can do that. But in my opinion, the machines own the 1 minute time frame. There's Barry, and he likes to do like the 5 minute just on the open to get a feel for the price action of the open, and then switch to a 15 minute. I think Andy likes to do that as well. I like to stay on a 15 all day long from the open all the way in. Yesterday there was an interesting observation. We had a nice gap up yesterday, sideways action, and then we tried to push through that level, couldn't do it. And then this is the simple moving average I'm constantly talking about. Just my only simple indicator on a 15-minute intraday can tell me so much. What it told us yesterday didn't tell us much today, but what it told us yesterday was once we get a closing candle below that rising moving average, the momentum is done. And yesterday that was in fact the case. Numerous tests throughout the day kept a lid on the price action. And so that's what the S&P looked like midday. Let's go over to the NASDAQ. Actually, let's go to the Dow. I'll save that for last. Dow did the exact same thing. Gapped up. The issue was attempted to be forced right here. We could have moved higher and kept the momentum in play, but momentum died when the 15-period candle closed below that rising intraday moving average. That's the moving average of momentum. Once that's broken, the momentum is stalled, and then it was confirmed that it was no longer upside momentum. It was now being controlled for the rest of the day yesterday by the downside. A little bit of interest here. It kind of tried to ride that moving average, but a lot of slop nonetheless over there in Dow. It's not going to give you perfect readings every day, but on especially days where we have a gap up, it can tell us one or two things. One, we're either going to go higher, or two, nope, this is where we broke, the momentum is done for the day. So that can help really make a lot of discretionary decision-making things when you just try and use this as a simple guide. Back to the bigger picture, NASDAQ, it was riding the underside of that 200-day moving average forever. It's not as much above it as the Dow or the S&P. The tech has been a little bit more heavily weighted lately. But we got 1, 2, 3 closes above. It's still hanging in there. Sideways action is okay. That resistance line in the S&P is not the same as it is in the NASDAQ. So it's kind of a downward sloping top there, higher, low, lower, high, lower, high, lower, high, which was broken in terms of your resistance lines or trend lines. So it's a little different there. The technology-laden NASDAQ in the Qs may just kind of go sideways a couple days here along the moving averages, and then it might have no other choice but to move higher. That's the more bullish signal. That's the fear of missing out signal that the people that want a pullback so they can bid in down here at these levels, they might not get it. I mean, constructively, the market needs it, but it doesn't mean the market's going to give it, because Andy knows this very well. Whenever the most people want the market to do something, it's not going to do it. It's going to do the opposite. So it's kind of a herd psychology there. And then lastly, one observation, the IWM, which has been interesting in terms of lagging lately. Look at that, it only posted one little day close above the moving average, 200-day moving average that we've been respectively talking about in all indexes, and then gave it up and actually closed at near lows. And we'll look at that, it gave us an interesting example again. Here was the moment that the momentum was broken to the upside yesterday in the IWM, confirmed, and then it actually continued all day today, and then a little bit of slop at the close. So interesting observation there.
Mm-hmm.
That's pretty much all I got, unless you want to chime in on something market index related.
Yeah, that's interesting. What you definitely some relative weakness there in the IWM.
Yeah.
No, you pretty much hit it on the nail. Paul made a good point. Wow, just noticed the declining volume, and especially if you go back to the spiders or the Qs. And yes, Paul, and what that is, it's basically you don't have. I mean, this is not like a euphoric rise. It's more of a kind of climbing the wall of worry rise. Where there's a lot of things out there, but we are moving higher. We do have. You would call that a V bottom, no doubt about it. But since we made that V, it's just been kind of like turtling, hey, let's go, come on, let's go, But it's a really slow. Like I said, it's just climbing that wall of worry. Now, I will say this about this kind of price action: if you do get a little scare in the market, like a macro event or something like this can really kind of fall apart really quickly. But right now. Yeah, I mean, when we start talking about Holly, and you see all the longs that are firing off, wow, maybe we don't get that pullback, Steve. Maybe we just go sideways.
Again, you and I have been around long enough to know how evil and dastardly the trading gods are. The market never gives everybody the majority what they want. They're going to find a way to fool the majority of the people most of the time. Mm-hmm. So before I give it over to Andy, I just wanted to do a couple of quick, high-level observations. I'm going to open up all the Holly trades here, and everybody can see the direction. It's either red or green. I want to say remind people that you don't have to get always so caught up on the individual trades. Andy's going to show some interesting setups and as well. But in the bigger picture, I know people. I spoke to them at the conference and talked to them about how they can use the AI as a dashboard. So using the AI as a dashboard, what's the first thing that kind of comes to mind? Was there a directional bias in Holly today? Yeah, I think you could say there was. There was only one short, everything else was long. So even though we've been talking about the market up here getting sloppy and the volumes are dying out, the AI only saw probability and the path of least resistance to the long side. And that's something that you guys really can pay attention to as a dashboard. Now, I'm drawing all these crazy lines, but there will be a point in time where we will have another tool of the AI, which will be a dashboard. And you don't have to pull this up and look at it. We'll have a scale and some needles that are moving that are saying, what are the biases? That's one, 30,000-foot view. The other 30,000-foot view is, risk on and risk off. Today, for the most part, it was close. Two of them were risk on. One of them was barely risk off. So, on those days when you can see that the risk, I'm sorry?
Two of them were risk off, and one of them was barely risk on.
Well, that's how they finished throughout most of the day. Holly Neo actually was, and so it changed. My point was it wasn't quite all three in a row, but when you have a 3 green, as pilots like to say, 3 green means all your landing gear is down and locked. You're confirmed that 3 in the green and the same side is going to signal that. Here's a great example, guys. Let's look. If risk on is across the board, risk on, risk on, risk on. Holly's long, long, long. You've got some long trades too. Well, that's telling you something. It's telling you that when you look down and you see that $300 or $400 winner that just really starts to get you sweating, because if you don't reach down and sell it, they might take it from you, and it's a horrible feeling to see that money taken from you when you could have taken it. You all know the feeling. But if you look over and see Holly risk on across the board, that might help you in your discretionary decision process to go, maybe I'll just sell half, lock in half, and kind of satiate that demon and let the other half run, because Holly's telling me that the path of least resistance is higher. And it all comes down to this. You've all read the same thing. Cut your losers and let your winners run. Well, what I just explained was one possible way to use the dashboard of Holly to help you let at least a portion of your winners run. And once you start to do that, it gets a little easier and easier on the psyche. So a little bit of a preamble there, pre-ramble, I'll call it. And you can give it over to Andy if you want to finish.
Yeah, I'll grab it. All right, thank you, Steve. Now, all that being said, I have seen better examples in the market where she's got loaded up, and let's face it, the market really didn't do a whole lot today. But I definitely understand where Steve's coming from, and it's interesting. For me, I'm going to be watching tomorrow real closely because remember, guys, a lot of these strategies, geez, I would say probably 80% of them are we give Holly these base strategies, and we use daily settings. Okay, so it's not just all intraday, stuff. We use a lot of daily settings in this, and so. And once again, like Steve was saying, the probability was to the long side today. That was the strategies that were firing based upon probability of her parameters. All the stars lining up, if you will. So I'm going to be interested. Now, this could be a total different scenario tomorrow. We all know that the market is so dynamic, and that will what makes it so great. There's not one day exactly like the other. But I'm going to be watching for potential long buys tomorrow, just based upon all these long strategies that Steve was showing you there. He covered a lot. I was going to go over the long strategies, but that's fine. He took care of that for me. But I'm also going to say what I was really impressed with Holly today was her risk off. Okay, and you guys heard me talk about this. I mean, Holly Grail finished risk off at 193. If we go to risk on, you're going to see it didn't do as well. So that tells me she is making good outs, good exits. Only one stop hit out of 13 trades. That's not bad at all. And look at all these profit saves. You got a target hit here. You had timed exit that got out, at the right time. Even in some of these trades where she got out for reduced risk, they went lower. So to me, guys, that's what I'd be focusing on, risk off. That's what you want to see. I mean, because honestly, it's, that's what she is eventually judged on. Okay, when we put out a publication, we use the risk off numbers. Risk on is great for you to follow. All right, for at the end of the day, you can see if you'd have held on, what would have happened. But you want these risk off numbers to be good. All right, this is Holly Grail. Let's take a look at 2.0, and I'll save some time. Holly Neo is pretty much flat on the day. We won't really go there. There's kind of some winners and some losers. Just kind of went nowhere. Holly 2.0, different story. Loving this one. Okay, she had 21 trades and not one stop out. Okay. She got out for reduced risk on several occasions, and actually some of them went higher. And look at this risk on. Risk on was, let me put this one on Holly Neo. I'm sorry, 2.0. Risk off was 1196. Risk off 1168. So actually this is wrong. Well, this is based on my my account size, my share size of $200 based upon a stop loss. But you can see there, really good numbers on both risk on and risk off. Let's take a few, and this is another thing I like to, when I notice when Holly's really doing well, she has what's called a lot of no pain trades. So let's go through a lot of her best performers today. Not a lot of them. Let's go through about 4 of them. APC. I'm not going to break down each trade, but we're going to look at the common theme here. Okay, on support, backing up. There's your trigger. No pain. Immediately bounce. Look at that. Nice little trade there. FOCS. Another nice one. There's your trigger. Maybe trickle down, maybe 10 cents below at the most. And nice follow through for nice risk off exit. MVP. Once again, tailwind. Backing up, gave you a couple of chances here to buy, dip there below and a dip there below, and then no pain, moving higher, nice risk off trade there. SIG, you're seeing the what's happening here. You know, a lot of just no pain trades. Here's another one. Fired here, a little bit of against you, maybe 3 cents, and then just a nice, pretty much trade all day. That one, risk on, performed better. We'll do one more. Altair, I'm not sure if this one was a no pain. Yeah, there you go. Another no pain trade. Backed up. Holly calls it.
Look at that fast line, that 10 period. Yeah, last 3 charts you've shown. Yep.
So there you go, guys. Some really good opportunity today. Now I know it's a lot of trades. I thought, you know, I was really surprised, given that the market didn't do a whole lot. But guys, this is it. Remember, there's no Oz behind the curtain, you know, pulling any levers. Okay, this is just strategies that she has, and we cannot control. You know, I guess we could limit the number like we can in Brokerage Plus, the number that she did, but and I think we do to some extent. But nonetheless, this is what she fired today. And even though it's a lot, there's some nice profit gains. I mean, this is just based upon a stop loss of $200 per trade. And that's some real nice profits there, guys, whether you're doing risk on or risk off. Now, obviously, there may be some slippage. There may be some cases where you get a better feel. But, you know, if you're manually trading it right now. But nonetheless, some really good numbers from Holly. And like I said, we'll take a look real quick, but there's not a whole lot to discuss here. She had had a couple of stop hits. She had some good trades, but just kind of, I think risk off. Yeah, I think they're pretty much the same, right around the flat line. But a good day, Steve. A good day.
Yeah. And, you know, a good example of how the AI is a gray box. It's not a black box. It's a great entry, and then manage the trade using that moving average I talked about. Humans are involved. It's man and machine, guys. You know, sometimes you might outperform Holly if you actually have some discretion and some reason, but the real genesis and, I mean, the real value, we believe in the genesis, it is the trade call of the entry. That's what I was trying to say.
It's funny that you mentioned that, Steve, because I think this is what, when Holly does open up for auto trading, I think what a lot of people are going to do, kind of what you and I have been doing as we kick around the Brokerage Plus, and we've been doing it for a while now, just still paper trading it. But nonetheless, I find myself not even using targets, not even using time stops. I let my algos get in me get the trade for me. Okay, it's all about the entry, and then I just manage them. And you know, I'm typically working maybe, I don't know, 15 stocks, so you're not sitting there focusing on a level 2, or you're just kind of watching the P&L. If one gets out, you know, looks like it's getting away, you pull it up, see if it's how it's setting up technically, put your stop in. So it's really cool. And I think when people trade Holly, they're going to realize, you know, if you think you're going to plug it in and go play golf, guys, I'm going to tell you right now,
you're going to be disappointed.
Pack it up. All right. And because it's not going to be like that. Not how it was meant to be.
All right, I'll take her back from Andy, and we'll dive right into the trade of the week, FLR. You can see that blue tag on there is the buy stop. Oops, here we go. Thank you. Is the buy stop of this kind of reversing, bottoming cup and handle pattern. But since I was gone, and Andy so graciously kind of stepped in and marked this trade up, I'll kind of let him talk about it.
Okay. All right. Thanks, Steve. And yeah, Steve, I probably, if I was sick, Steve could probably tell you verbatim what I would say, because when we ran our little mini hedge fund with Ditto Trade, and people were piggyback on our trades, when the market got overbought like it did, and I stated that in the write-up, you know, we don't like to chase in these extremely overbought stocks. Those are the ones that are most likely, if you do get a big pullback, you know, you can get hurt. So we're looking for something that could be potentially bottoming out. Okay, and what I like about Fluor, they recently had earnings on Friday, and you know, I like the price action that day. It went right up and closed the gap. If he zooms out just a little bit more, you'll be able to see the gap on the daily. There you go. You see over there how it closed the gap over there, going back to early December.
That's the earnings day that I highlighted.
That was the earnings day, right? And on that day, it filled the gap and then backed off. Well, here's my thinking. Okay, if it does put another assault on that gap and gets through, it could be some good follow through to it. Now, I love what's happened so far. What we never want to get in an overbought condition is what we call tippy-topped, and that is it goes through, you know, and then of course the market decides it's time to sell off, and it triggers, and then you know you have to come down with the market. So I love this is the way this is setting up. It's still obviously intact, a trade above that 39, and that is the trigger. Everything's still intact. You got the moving averages lining up pretty nicely there, but no reason, I don't see any reason with the market potentially coming into an area where it could pull back to jump the gun here. Okay, so and
I'm actually glad it didn't trigger.
Me too.
Already? Yeah.
Yes. That's the first thing I told Steve about an hour after the open. So, boy, I'm glad that didn't go trigger, because now it's setting up nicely, and there's potential if it does go. And I love the little lower bottom there, up above it's moving out. There's a lot of good things to say about this. And if you zoom way out, you can see how far from grace this thing has fallen. See, that's a nice little almost cut in half there. So it was cut in half. So.
Little trend line happening there on the intraday, hopefully gathering the speed as it's going to go and try again. Would hate to see the stock trigger and then come back and break that, so please keep that in mind. This is new data since the trade of the week was written up. But all right, again, thank you, Andy, for writing that up while I was skiing. Appreciate it.
You bet.
That's how it works around here. We have a deep bench.
Absolutely.
All right, so now I think we're going to check in on the alerts that were set. Oh, no, we're going to go for a sector glance. Let's look at a sector glance, right? And sometimes we find maybe 2 or 3 sectors that are really interesting that should be monitored tomorrow, and maybe even a day and a half if we're lucky. But let's just go through here real quick, starting with oil. Excuse me, that was not oil. That's a very good looking chart. Oil, not bad. I mean, keep an eye on it. It got ahead of itself, pulled back. So, you know, the people that bought it up here now kind of maybe wish they had a chance to buy it back here on this little bit of a pullback. Something to think about. But what really looks good is the trade of the week from 2 weeks ago. This is a secondary trade around. This is a wonderful setup, guys. I know Andy can see exactly what we're looking at too here. Nice big push, and then a nice reset back here into the pocket with a good looking candle right there as well, I might add. Nice bottoming tail. I wouldn't be surprised to see this. As a matter of fact, we're going to set this as one of our alerts later. It's that good. We're going to set some alerts later, and there's no reason why you guys can't even participate on these things if they do in fact trigger the following day, but it'll probably go above, you know, across today's high. Could be a nice follow through for typical higher lows of a trend. The gold miners have been breaking out. I said it yesterday in Jamie's deal. You know, JC Peretz spoke at the October trade ideas. Pretty much said a big correction crash was on the table. It was in fact on the table. We did exactly what he said could happen. We pulled back 20% since the October discussion from JC. And in Colorado yesterday, he was saying, it looks like after 9 years, the gold bugs are finally going to have their year. So he was only confirming what Andy and I kind of already saw. You know, again, we called the GDX for its technical strength 2 weeks ago in the trade of the week back then. So interesting. Gold miners look really good. I'll just say that the gold GDX itself, where is GDX? That was GDXJ. Well, we'll get to it. They're still moving after hours. Okay, retail doesn't look bad either. Kind of coming out of what the market wants to do, pulling back. Perfect example, guys, of price action pulling back to prior resistance, only to become current support and then move higher. Retail doesn't look bad. Not as good as gold miners, but doesn't look bad. Treasuries are just, confounding everybody. Super tight range. At some point, we're going to get a release from the treasuries. I'll tell you what, if the market does give us a bit of a corrective pullback, these treasuries might be defensive and push higher. They kind of look like they're looking for a reason. That's a big flag. Big giant extended flag. Silver's going to look great. Again, the miners and the gold and silver commodities looking decent. Kind of a double top back here. I've got that orange line in there as a significant level. Look at that basing way back here in last year. Well, that base is now going to become resistance in silver. We're going to have to resolve that over the next few weeks, I think. There's gold, of course, looks great, just like the gold miners. Let's see what else we got. Okay, REITs looking like tired, like a plane that's ready to stall. Doesn't look that great. Here's the GDX. Looks great as well. I mean, let's add for the GDX. It's got itself a nice looking bottoming tail today as well. In the GDX. Watch the gold miners tomorrow, guys. I think that's the hot sector coming into tomorrow. I'm gonna quickly.
Do you mind if I interject something here?
Always.
This is reminding me a lot of after the big crash in 2009, when you got into the 2010, 2011, people kept talking about the Goldilocks economy, and I hope we're not going down that path again, because if we do, it means zero interest rates are headed back to zero. Heaven forbid. But when you start seeing things like gold, bonds and stock, everything moving higher, yeah, that's a sign of
it's a red flag.
Yep.
Something to watch.
Yep.
And we've kind of been touching on it the last couple of weeks, haven't we, Andy? Just kind of saying, this market's not showing, which sector wants to be leadership. Is it defensive or is it stocks? They're all kind of painting themselves into a corner, so we'll see how that resolves. All right, so far we like retail, definitely gold and silver, gold miners. That's about it so far. Oil, okay, perhaps. Interesting, though, that the gold miner juniors extremely outperformed the regular gold miners today. Look at that. GDX was flat with a nice candle, but GDX had much better gain. Interesting, huh? All right, so back down here, we've looked at all those. The Qs despise. The home builders look extremely tired and overbought. I wouldn't mess with those. Finally, biotech's been doing not a whole lot and broke above its key levels, but it's not breaking out. Doesn't really look like it's making any attempt. XLF got hit by its 200-day. Look at that. It can't get above its 200 like other indexes can. Energy looks interesting. So I'm liking energy here. Andy sees that too. Look at that pop up, rest, tight pullback. Cannot get below the 10-period moving average. I like XLE tomorrow as well. Semis look overbought and tired. And we're starting to get into the bottom of the barrel from today's. Healthcare, tight little flag, could go either way, but honorable mention for healthcare. Overbought there in the solars, rolling over in the banks. Look at how these financials, that's kind of interesting. The national banks, okay. 1, 2, 3, 4 days they could not post what I've always talked about, getting a close above the significant moving average, the key moving average. We can't even get that in the banks here. They tried, but they got stymied. And then a horrible give up candle. I'm going to call it a give up candle.
Closing on lows too.
This is going to have to regroup. These banks are going to have to regroup. They're not helping. OIHs don't look bad either. Energy and OIH is kind of the same a little bit. So energy, OIHs, and gold miners and silver. Oh my! Since we're doing Inquisitive Oz references. Okay, that's all I really see in the sectors. So we'll see where that goes. Next up is to kind of look at some of the charts we looked at last week. Now, I want to remind people that Andy and I always talk about it's really hard to get a movement more than a day and a half in some of these things. And so I think a lot of these last week's triggers are going to prove that. Let's take a look. Remember, there was our signal candle. It had about 1 day worth of movement, and that was about it. But you can see the green line shows that we are still above that level, but it's been kind of choppy. That was the first one in NTR. PEG, we will come back to you. 3 days still above. This one's still in play. Not too bad. And then we've got this one. Look at that. This was not a good one. Not a good downtrend for a reason, under the 50 for a reason. I probably should have never called that. Triggered with a little tippy wick on the open and then just reversed, but it's still in the range. Well, here's a fun one. This is a two-pronged issue here. It had a nice day and a half of movement, actually gapped up, but here's the problem. Earnings. We've got to remember to use our single stock window and say, oh, earnings were yesterday. So it was yesterday at the open, as a matter of fact. So I think it gapped up. Yeah, it did. It gapped up right here.
Brutal day.
And sold off. Yeah, so my point is, if you get a nice move, a day and a half, take your stick and move. Mm-hmm. That's where we are, especially, let me bring this up again, especially when we're in a market that looks like this.
Yep.
So
and last week's trade of the week. I mean, look at that. You called it too. You said about a day and a half, and that's what it was.
Yep.
Setting up again though.
Yes, it is. We caught that, didn't we, on the sector glance? Mm-hmm. Okay, so there's that one. This one triggered, looks like, but didn't do a darn thing. Still in play though, just didn't deliver any alpha. And then there's another great example, day and a half, 2 days at the most, and then this one fell. So hard to get things to go in the right direction. Yeah, Christopher Andy can answer that question for you. Mm-hmm. So let's clear, last but not least, look at this. Thank God it's just kind of like the trade of the week this week didn't trigger. Because if it did, it would have just probably faltered as well. So the train did not leave the station on that one. It stayed home. Let's go and delete these. Now, again, saying we don't have a whole lot of setups. It was hard enough to find a trade of the week. I've only found a couple setups here that are interesting, but we'll close that. I started with the composite rating index that has a nice short squeeze in there, and I found a 5-star right at the top. Cream rises to the top. That's why we call it a top list. iRobot. Hopefully it doesn't have earnings. Now, I had its earnings 13 days ago back here, so perfect. It's got a score of 98 on the composite rating, which means it's almost a perfect score of technicals and fundamentals alike. Therefore, you have to ask yourself, why the hell is there such a high short float rating? That's the data we pulled. It might be 5% plus or minus, but iRobot is definitely giving short sellers a panic attack. This is a beautiful setup up here. We can't even get a pullback. As soon as this move, we didn't touch today, but the rising 10-period moving average here, if the stock does touch it, a lot of times Andy and I are kind of superstitious back in, like he said, when we were running that mirrored account at Trade Ideas, we never really got excited about a stock until it came back and touched and said, tag, you're it, to the 10-period. And I think that has weighting. I think it has merit. There's probably algorithms out there that are written to say, no, we need to touch that moving average first, because sometimes it just is hell-bent on doing it, even on the open. It's got to just pull back and tap it on the open, and then once it's done it, it seems like the coast is clear for a move higher. So this is my best setup going into this week. Let's see what we can find. And again, I'm not going to be talking about stop losses. It's up to you, but I don't like it when candles close below the 10-period. So use that as your discretion as to how you'd manage if you get into this trade. But let's look. It looks like yesterday's high was the way to go. So let's grab that, which is 123.26. Create price alert. 123.27 is our new, and this is my 5-star trade. I like this one. Primarily because, again, what are the short sellers banking on? The score is extremely high. The technicals are extremely good. The fundamentals are good. They're not dying or drowning in debt. But for some reason, there's a lot of short sellers in there, and we could get a nice squeeze. I don't think this gap is going to be filled, quite honestly. Next.
That was my write-up for that scoreboard article I did at blog.
Yeah, that's right. That's right.
Remember?
That's right. Yeah. Nope. Not going to chase. Not going to chase. Not going to chase. Okay, this one's interesting. Maybe you can get a day and a half, meaning today was the day. Maybe you get some follow through tomorrow. But with a stock like this that has 32% short the float, how big is the float? I need to get that in here, actually. I need to do that. They might have something to say about that. So Let's go into the high of today, 38.88. We'll go 38.89. And there's that one. ENTA is the only other one that I found on this. I'll just show you. I'm not going to chase. Gapped up, purchased. Nice candle today, but there's no setup there. You could consider maybe a possible follow through on that day, but I don't like the red candle. And then this is the third one and final one that I'm going to call out of here. Nice looking pullback. Maybe this is what GDX will do tomorrow after this kind of candle right here. But I'm just going to put a high. I'm thinking this is just going to follow through. My thinking is that this test is going to hold and should in fact allow for maybe a new higher high taking back here. So we'll go with today's high. If anybody has any questions, you can type them in now. We can start getting to them if we need to. 103 and 01. Whoops. 103.01 is the number. There we go. And then lastly, let's just mark up GDXJ, secondary trade around, or GDX. Yeah, we'll do GDXJ. Looking so good, we'll just take the high of today. I think if it takes out this downtrend, today's high, 33.54 is what we want. All right, second attempt at the trade of the week last week. And then lastly, I can't remember where I got it. Let me just look at it real quick. No, I don't really have a lot of conviction on that one. I'm not familiar with it. So I'm going to leave it at that. Just those 4 price alerts. And so I'm going to go ahead and highlight those 4 price alerts and we'll send them out. And like I said, we've still got a few minutes of question and answer if anybody has any questions, or if you want to look at a chart, we can do that too, just to kill another 5 minutes. I'm going to share the 4 selected alerts, copy them, and then drop them into the chat window. Price alerts this week. Now, those of you who know, you can right-click and save that link address, and once you've done that, you go to File, Load from Cloud. You'll be able to load those 4 price alerts. Once you click the load button, they'll pop right up into your price alert window as working alerts in blue, and we'll all have the same exact trigger, and maybe that'll help curate a couple ideas for you guys this week if something does trigger. All right, so let's see here. Any questions we need to get to?
Maybe Waleed.
Okay. Oh, let me stretch it out.
You want to know what you consider chasing? Okay.
Yeah, I would consider chasing. Let's find. We consider chasing that. There's no discernible setup. Nice highs every new day, but at some point you're going to suffer a pullback. That's chasing. That's chasing. Gap up after 3 days of green. It might look good and make you feel comfortable, but you're just asking for a pullback, probably to come back and test the lows. So there's no real hard set rule, but the more green candles in a row, the less likely I am to want to chase. That's not a chase. That was something coming out of consolidation. iRobot is anticipating something coming out of consolidation. Buying FLDM because it's been trending higher is a chase. Buying W because it gapped upon good news and had 3 good days of run is a chase. Imagine everybody that was able to participate in this gap up, and they're probably going to start taking profits here pretty soon. So, all right, hi. What about TTD? He's long. Okay. Kind of like we just looked at, it's possibly getting ready to set up. Obviously, they had good earnings. Yep, 3 days ago. There's your gap. Sideways action. It's a bit premature to decide what it's going to do from here. Yeah, it could go without you. Just keep an eye on it. I think you said you're long already, right? I am in long. So if you're in long, let's look at the intraday here. Obviously, this was tested twice. This level was tested twice. What is this level? Doesn't really matter where you're long. You don't want it to break this level of 192, in my opinion. It could very easily set up and creep below it and try to frustrate you. But again, it depends on what your entry is. If your entry was back here before the gap up, then you might have a little bit more wiggle room to let that test that level again. But if you're up here tight after the gap up, you really don't want to see that level break from the last 2 days. How do you feel about APPS long at 315? So long at 315. I don't think you want to see it break $3, and right now that's a round number, and it just happens to be the low of today, and that low of today just also happened to break the fast line. So if you can give yourself 15 cents of wiggle room, I think that's what you've got. It still may take a day or two before it could, theoretically consolidate and flag, get tight, and then move again.
I don't know. Is Sean going to be part of that option webinar tomorrow? I know he was.
I don't think so. I think it's an away. Okay. I think it's an away game, but if I'm wrong, Scott can let me know. Let's see. Oh shit! Something just.
GDXJ.
Short. Oh, short. It shouldn't be a short.
Oh, no wonder.
Oh, okay. Everybody, we're gonna have to disregard this chat. We're gonna have to set it. Yeah, but let's fix this and do it the right way.
Yeah.
Delete price alert. I don't know how that got triggered as a short. Let's go back to GDXJ and set this again. The high of 32.86, 32.87. Let's go 88. It shouldn't have gone short. It should have been long.
Yeah.
Oh, no, I went to the wrong one. Let's adjust this. Look at how we can do that, guys.
Oh.
All right, 33.53. We'll adjust that to 56. Give it a little bit of slop. Now we have a new working, let's do this again, guys. If you're still paying attention, disregard that first price alert. Let's share the second price alert and make sure it's done correctly. Use this one. All right, back in the chat window. Back to where we were. APPS. Okay, I think we got Chris. That $3 is your drop dead level. If you have to shave a little bit off to withstand that, you might do that. Some people might paint themselves in a corner and say, well, I can only withstand 7 cents, Steve. My size is too big. Well, the market doesn't care what your size is. It only cares where the next level of interest is. So you might have to shave a little pounds to get down there. Exactly, $3.99. All right. Okay, it looks like, yeah, Robert, question was answered. I think I'm not familiar with who the presenters are in the options tomorrow, but we don't always have a lot of content that's geared towards options. So anytime we do have somebody, if you're interested, it's probably a good idea to show up. I think that's it. No more questions coming in. All right, thank you, Waleed and Christopher. Thank you, friend. So let's bring in Scott, and I'll put the slides back up, and he's got some more info for you on the way out.
Yeah, right on. Thank you, Steve. So we have a podcast, and there's new episodes out on Fridays, so make sure that you have a subscription to that. Just search for Trade Ideas Podcast, whatever app you listen to podcasts in, and add us as a subscription. Get the updates, and you can scroll through the back issues, too, and find some good ones that have guests. Check those out while you wait for the new episode. There's an ebook out. Both Steve and Andy contributed chapters. There's 5 strategies in it, and it's 5 ways to win in a post-BTFD market. It's currently... last year was a rocky year, and this year is shaping up to not quite be bullish yet, so check that out, trade-ideas.com/ebook. Plug in your email address, get the download link. It's free, and it's a nice PDF to have. We have a discount code, Get Holly Ideas. It's all caps. It's case sensitive, but that'll let you save 15% off your first month or year of Trade Ideas, any subscription. This can also be used to upgrade. Subscribers, if you're on standard and want to upgrade to premium, just go to the homepage, click in login in the upper right, and then select change your subscription type from the right-hand menu and use that code. Save some cash. You can follow Steve on Twitter at TodayTrader. Also follow the main Trade Ideas account. Facebook.com/TradeIdeasPro is the official Facebook page. You can follow that if you're on the Facebook to share stuff with your friends, and we sometimes post other announcements there too. Info@trade-ideas.com is the best place to send all your questions because that goes directly into our help desk software, and the appropriate team member will take care of you quickly. Thanks, everyone. We'll have the recording up later on tonight or tomorrow. Thanks, Steve. Thanks, Andy. Thanks, everyone that attended.
All right, see you next week.
Yes, and Robert, I don't think anybody from the Trade Ideas team is going to be on that webinar tomorrow.
Sean will be on. He's just.
Oh, Sean, okay.
He's not presenting though. It's eOptions is presenting, but Sean might chime in now and then.
Okay. All right. That's what I thought may happen. All right, guys. See you Thursday.
Bye-bye.